Welcome back to London on this overcast October's day. Now, Jeremy Stretch is the head of FX strategy at CIBC and is the perfect person to give an overview of the majors. Well, I don't get many opportunities to talk about the loonie, so let's start by talking about the Canadian dollar. It's around about year highs at the moment. Is there much more room for the loonie on the upside?
Well, it is true that the Canadian dollar has been trading pretty robustly through the majority of the year, on the basis that in part because the growth story is holding up comparatively well compared to elsewhere, and of course also the fiscal dynamics are relatively strong also. The question is, can it go much further? I think it probably will struggle to get through those highs of the year, but I think it may well have a go at those before the end of the year, particularly as we start to see some question marks over the year-end flows, which may well start to favour a little bit more Canadian strength.
What about the possibilities of a Bank of Canada rate hike? The employment situation is looking relatively good when compared to the US, so is there room for a rate hike in the next year?
Well, certainly the Bank of Canada have been maintaining a very hawkish stance over the course of the last 6 to 8 months, and that's in enormous contrast to pretty much whatever we see elsewhere, where monetary policy is almost continuing to be on an expansionary basis. Can the bank tighten in the next 12 months? I think that's probably unlikely. I don't think we're going to see growth strong enough in the next 12 months to close the output gap materially, which would allow them to hike rates. But I think they will keep that hawkish bias, and it's probably a story for the beginning of 2014 when we start to see the prospect of actual rate moves.
If we move south of the border and concentrate on the US dollar for a moment, the Fed have launched this open-ended QE program. What does that essentially mean for the US dollar?
Well, I think initially people automatically assumed, perhaps rationally, that QE1, QE2 was a very dollar-negative story, so QE3 should be exactly the same. And after all, that's really what the markets priced in prior to the event and even after the announcement. So we did see a lot of excessive dollar weakness. But I think what you have to remember is that policy isn't operating in a vacuum in the US. We're seeing expansionary monetary policy elsewhere. And I think that's one of the reasons why we're not going to see the sort of dollar weakness that we would have assumed, certainly under QE2. So I think we're then left to look at the underlying fundamentals, which are hardly robust in the US, but again, on a comparative basis, are not that bad. So assuming that the US doesn't fall off a fiscal cliff, then that should imply that the US dollar holds up comparatively well.
Do you still see the US dollar as a safe haven?
I think there is still a strong safe haven theme to the US dollar. I think there is this question mark about the global story, whether it be the implosion in the Eurozone, whether it be the deceleration in China. And whenever we get periods of those extreme levels of volatility and uncertainty, then we do find investors still retreating back to the US dollar. So I think that safe haven trade still has some validity.
Let's talk about the sterling. Sterling's come under quite a lot of pressure this week. The Olympics obviously might give the UK GDP figures a bit of a bump this year, but this quarter rather, but that's not fooling anyone, is it? There's still fundamental problems with the UK economy.
Indeed, there are fundamental problems, but having said that, you could argue that in view of the weakness of the underlying economy and the pressure points that we're seeing on the fiscal side, that the UK and sterling has held up remarkably well. It's been obviously partly attributed to the diversification play in Europe, so euro sterling is held in comparatively well. Is sterling going to weaken? I think there may well be some scope for a little bit of weakness against the US dollar. I think that's more of a case of getting back into the sort of fair value range of 150, 160. But I don't think necessarily that sterling is going to fall off dramatically, because despite the structural impediments that we continue to see in the UK, we will probably find that growth will look better next year than certainly compared to the Eurozone, for example.
Yeah, the cables has dropped below 160 this week. Would you say that that's a fair value for the pound?
I think once we get into the 150 to 160 range, then we're not misaligned, and I think a number of markets are seeing currency valuations which are incredibly misaligned in the current scenario. Sterling against the dollar, 150 to 160 is the broad valuation range. If you get to the extremes of that on the top or the downside, then I think that makes sense to start to trade against it.
Chinese GDP next week could be a very important release for the markets. How do you expect that to impact the commodity currencies, especially the Aussie dollar weakened a lot on the back of the RBA's rate cut last week?
Yes, that's right. I think that the China story is the big third leg, if you like, like, of the global backdrop. So you have the US growth story in QE on the one side, you have Europe and the potential implosion or structural risks on the other, and the third leg of the global system is China. Now, I think there is a risk that China does decelerate probably faster than the markets are anticipating. We've seen those downgrades from the World Bank and the IMF this week. I think the risk is that still the growth numbers are weaker than that on an annual basis. And so that, I think, continues to be a net drag on those that are leveraged off the China growth story. And obviously currencies like the Australian dollar are a key currency which could well suffer from that basis.
We have to finish with the Eurozone. In the perverse world of the Eurozone, the Euro's actually gained on the back of the S&P cutting its rating for Spain. Once Spain does seek that bailout, because it does seem inevitable, what sorts of range are you expecting the euro to operate in against the dollar?
Well, I think it's very interesting that obviously we've seen this S&P ratings change. I think really the big one that we're waiting for is to see whether Moody's are going to downgrade, because if they do, then that would take Spain to junk status, and that would be a real material impact on the Spanish outlook, and that would probably end the procrastination that the Spanish government are continuing to go through in terms of the bailout process. If and when they call for OMT assistance, then I think we could well see maybe 3 to 5 big figures of euro appreciation on the basis of that announcement. But I think that probably is a very short-term spike, because ultimately, even if the ECB are buying under the OMT process, it does little to deal with the fundamental structural problems in the Eurozone.
Some real quality insight there from Jeremy Stretch, but unfortunately that's all we have time for now. Goodbye.